आजा भाई यार, हो गया टाइम।
तू वेलकम तो कर। किशन, मेरे में से इवेंट्स ही गायब है। मैं तो सनी के इवेंट ही गायब है। बोलना है।
Good morning, all.
Good
Welcome.
morning, all. Welcome morning, all. Welcome morning.
Good morning, everyone. Kishan, am I audible? Am I audible? Yeah. Thank for the confirmation. Thank for the confirmation, Pawan. Yeah, Vijay Kumar ji. So, good morning, all. Welcome to this webinar on outlook on calendar year 2024. And before we proceed ahead, I would like to wish you all a happy new year. I pray to God that this year will bring a lot of happiness, joy, and a lot of wealth creation opportunity for you from equity markets. So joining me today is my colleague Sudeep Shah, who is heading technical and derivatives team in SBI Securities, and I am handling a fundamental desk over here. So without much ado, I would like to hand over the floor to Sudeep to walk us through the technical landscape of equity market after a robust rally which we have seen during the last 8 to 9 months. And post that, then I will walk through the key sectors which should be on our radar from an investment perspective for the next 12 to 18 months. So over to you, Sudeep.
Yeah, thank Okay, so sorry. Okay. Now, am I audible? If Vijay Kumarji, if you can just confirm. If anyone can just confirm now. Am I audible now? Yeah, thank you. So, first of all, Ravishji, are you able to hear me? Thank you so much. Yeah. So, friends, welcome to this webinar. And first of all, let me extend my New Year greetings to all of you. Let this year be the best year for all of us from an equity markets return perspective, as well as from our families' health and well-being perspective. And we shall achieve whatever we are set out for. So, I pray for all of us. And let us just start now. And we will keep this session in English as well as Hindi. तो हम mix कर देंगे इंग्लिश और हिंदी के हिसाब से. तो मतलब सिंस आवर ऑडियंस इज फ्रॉम डाइवर्सिफाइड cities, so that would help everyone. So Nifty, if we see in the last 1 year, last 2023 year, has been a standout performer. Now, if you 20% returns markets have given us, and this has been a consecutive 8th year of positive closing. So the trend from an overall perspective is very good. अगर हम trend देखें मार्केट का लास्ट 8 साल का तो बहुत ही पॉजिटिव है. और यहाँ पे if you see compared to Nifty, a higher return has been visible in Nifty Midcap 100, Small Cap 100. तो वहाँ पे 45 से लेके 55% तक के रिटर्न्स भी आए हैं. बेस्ट सेक्टर्स रियल एस्टेट सेक्टर्स. एंड also if you see this rally has happened without much of FII help. So if you see FIIs have been net sellers in the CY 23 period, and on the contrary DIIs have been net buyers. Now DIIs have added to a substantial amount of something around 1,85,000 crores, while DIIs have been net sellers to the tune of 16,000. FIIs have been net sellers to the tune of 16,000 crores. Now this shows that our markets are no longer completely they are dependent, but they're not completely dependent on the FII flows. And even our DII flows are substantially matching up. A lot of SIPs, a lot of participation from all the institutions. So that has been a big positive for this year now. Now, let us see how the broader market has performed. While Nifty has returned around 20% for the last year, आप देख सकते हो निफ्टी 500, निफ्टी मिड कैप 100, निफ्टी स्मॉल कैप 100, 150, 400, सारे इंडेक्स. नाउ निफ्टी को तो 20% गेन्स है, बट ऑल दीज मिड एंड स्मॉल कैप इंडाइसेस आर एनीवेयर बिटवीन 45 and 60% returns. So this is actually the best year from our market perspective. And why we say that we are very comfortable with the growth trajectory of the markets is because generally क्या होता है पता है, जब निफ्टी चलता है, when the nifty is moving, the large the mid cap, the small cap side is quite on the sidelines. अगर वैसा scenario होता है, then you think that the rally is only limited into a particular stocks. But here if you see, the rally is not only limited to Nifty, it has been completely visible in small mid cap, and a lot of diversified sectors have moved. Now, who would have imagined railways out of all, defense out of all, in the last year to make a big move and become a standout performer? So last year का जो rally था, a lot of sectors have participated, and that is the reason we say that it is a broad-based rally. Now, just see here, the red line is the Nifty, and above that, the outperforming sectors have been Nifty Auto, Nifty IT, FMCG, Media, Pharma, PSU. Banks have outperformed majorly, and the standout has been Nifty Real Estate. So a lot of positive government policies have been there. Big support from the government push towards the infrastructure. Now a lot of initiatives taken on the healthcare front. So a lot of these stocks across these sectors have given positive returns, and we feel that the outperformance in the pharma space, in the FMCG, auto, healthcare could continue from here on also. And one sector which could take the lead from here on, which was the underperformer in the last year, that could be Nifty Oil and Gas, because Reliance has started to outperform. And also with the inflation pressures now just reducing, or inflation trajectory now cooling off, financial services as well as the banking stocks also could be on the forefront. Maybe because of the last month's big rally, we might see some consolidation and ahead of the election in May. In the next few months, we could see indices consolidating at higher levels. But despite that, in the second half of the year, what we could see is the outperformance in these names in the sectors that we have just mentioned. Now, also just to underline the broad-based performance out of the Nifty 500 stocks, if you see how much returns now, if you see here, now Nifty 500 out of the Nifty 500, if you see between 5 to 10%, only 25%, 25 stocks have been there. Between 10 to 20% gains, 54 stocks have been there. But the highest gains, like if you see stocks which have returned between 20 to 50% and 50 to 100%, is around 272. So there has been a significant participation even amongst the Nifty 500 stocks, and that is why we say that the breadth of the market is good, the health of the market is good, and we feel from here on also this performance could continue, although it might be a bit slower now, because we cannot expect the same pace of the rally that we have seen in the last year to happen in the next few months, especially when you are heading into an election year, and more than 55 countries this year are having their elections. So what could happen is that a lot of global volatility also could play a part here. You have the US elections also towards the end of the year. So what we feel is that this year we should not be expecting the same kind of returns that we have witnessed last year. It would be great if we are able to consolidate and even maintain the returns of the last year and slowly pick up from the last year's moves. So I feel that the next year is going to be good, but we need to have our expectations a bit on a if you say we need to have our expectations in line with what the markets could perform. Am I audible? Yeah. So now going forward, see what the global indicators are heading towards now. If you see dollar index from 107 half levels had fallen to roughly 100.18. This is now, this part was, if you see here, when the dollar index in the previous up move, it was at the same time when the inflation was rising, and the bond yields were rising, the Fed was on an interest rate up curve. But steadily, when the inflation started to peak out, the Fed started changing its narrative. We've seen dollar index falling. Similarly, at the same time, the US 10-year bond yields have also fallen from 5% to roughly around 3.8%. So this is the time when markets have rallied. So if you see, you can map it up with Nifty, and you are seeing that rally in the Nifty in the last 3 months, while the bond yields and dollar index have cooled off. But in the last 3-4 sessions now, if you see at higher levels in Nifty, but you just see dollar index now from 100.7, there is a slight spike from lower levels. Even US 10-year bond yields ने भी नीचे से 3.8% से लेके 3.75 से लेके 3.95% तक का एक हल्का सा रिबाउंड किया है. So that is the reason we are seeing some kind of consolidation in the markets. And we expect this dollar index के लिए 102.5 will be the most important number. So 102.5, if the dollar index crosses from here on, we need to get a bit cautious in terms of the equity market moves. US 10-year bond yields 4.2 will be the most important trigger point where we need to get cautious. So it could move to 4.1, 4.15, and once again, if it slides down, this would be the best time for accumulation. But if it moves above 4.2, आपको ये देखना होगा कि it could, Nifty might not fall big, but what could happen is that Nifty could slide into a period of consolidation and could play between the range of 21,200 and 22,200 on the upside. Yeah. Sorry. So if you see the Brent crude oil prices, that index has been on a decline now. Once again, it had moved to $80-81. But what had happened is that was because of the supply constraints, because of the Red Sea security issues. But once again, with that, those now going on the back burner. We are not hearing much from the Red Sea front. Not much concerns are being voiced now. That is the reason the crude oil prices have once again fallen down from $80 to $75 and is hinting towards going towards a new low. So that is one positive from an Indian market perspective. And we are already hearing chatters of some fuel price cut. So this, if we see Brent crude oil prices sustaining around $72-73, that fuel price cut may actually happen, and that would be very good from an economic perspective, and that would even reduce the pressures on inflation. So I feel overall the scenario is hinting towards a consolidation with the dollar index and US 10-year bond yields moving up slightly, and crude oil prices now once again softening from the current levels. So थोड़ा मार्केट के लिए क्रूड ऑयल प्राइसेस पॉजिटिव है, बट जो डॉलर इंडेक्स एंड यूएस 10 ईयर बॉन्ड यील्ड में जो एक अपमूव आया है, थोड़ा मार्केट को एक साइडवेज एक्शन की तरफ हिंट कर रहा है. So coming to the longer term time frame chart of Nifty, see here, Nifty since a major part of the last year, it was consolidating. You just see this trend line which we have drawn here, and the breakout has actually happened in September, October, and uske baad December mein the real rally has taken out after the retest of that breakout zone. So if you see the long term chart, ये जो cup and handle का जो पैटर्न है, यहाँ पे एक बार 23,800 24,300 तक के टारगेट्स तो नजर आ रहे हैं हमें, पर since the indicators are approaching overbought zone from the current levels, there could be some consolidation. We could see the levels of 21,200 21,300 acting as an important support. If you see in the last year, now index has never Nifty from July 2020, once it had crossed its 200 DMA, it had never broken that 200 DMA till October 2021. So it's 16 months, 60% gains. This time that 200 DMA had been broken from the downside on April 2023, and now we are 8 months. The 200 DMA has never been retested till that time, and we feel that still this index could inch up higher. The 200 DMA might not get retested, but the short-term indicators are hinting towards some kind of a consolidation. So I feel that 21,200, 21,300 could act as the first support in this consolidation period. And on the downside, this 21,200 till it holds, next couple of months range could be 21,200 on the downside to 22,000, 22,200 on the upside. But the larger term time frame, the chart shows positive structure. So as we say, Nifty has demonstrated remarkable strength and resilience, and it has now, if you see, last 3 quarters of 2023 has given extremely good returns. Now the year started with the Adani saga. You've seen 3 bank defaults in the US, and also there were these issues of inflation moving up and the US Fed rising the interest rates. But slowly, steadily, when the inflation trajectory mellowed down, you've seen all these other issues also slowly moving away, and even at higher levels, even at inflation, now the expectation of the inflation coming down triggered such a big rally. And in the next year, if really in the realistic way, if the interest rate trajectory comes down as expected, then we might see a decent move in the Nifty from here on also in the second half. As suggested by Fed, in the second half of 2024, they could start with the rate cuts, and that is the time which could help the global markets also overall. And by that time, Indian election also, the general elections would also be out of the way. So we expect the second half of the 2024, the current year 2024, to give good returns. And also one important thing is that last couple of months we've seen stocks like Reliance, Infosys, TCS, Larsen, Bharti, Airtel, a lot of auto stocks. These stocks have given good foundations. They've started to move out of the big consolidation patterns, and they are hinting towards a good upside. So along with the markets, we feel that these stocks, which are the critical components of Nifty, they are ready for a big up move, and that could support Nifty in the move going ahead. In the short term, as we are seeing in the short term here, this zone of 21,200, 21,000 zone could act as an important support. Now Nifty is around 21,500, 21,600 zone, facing resistance around 21,800. So after a big rally now last month, in the month of December, we had seen that one big fall from higher levels. Post that, Nifty has made a new high, but the RSI is showing negative divergence. Now Nifty has made a higher high, the short-term indicator RSI has made a lower high, and that is the reason we feel that because of the indicator, there could be some cooling off in the markets, and we might not see a big fall, but at least a consolidation could be witnessed. So overall, below 21,500, there could be profit booking up to 21,200, and that zone could be a good re-entry zone from a medium term perspective. On the upside, 21,750 will act as an immediate hurdle, and about 21,750, 21,780 zone, fresh highs up to 22,000 could be witnessed. Now, this is one interesting slide here. Now, one interesting point which I wanted to discuss with all of you is what is happening is that in the last 6-7 sessions, we have seen volatility index moving up from 12 to around 15 and a half levels. Now, this is very important. Now, what had happened is that a lot of people have this notion that when VIX moves, markets start correcting immediately. It does not happen. So we have seen while the VIX has moved from 12 to 15, Nifty has already rallied 7-8% in the same time period. So this correlation of VIX moving up and shorting Nifty is not working, and one should not believe that. And I feel it just means the rise in VIX just means that the volatility is increasing, and and it will definitely happen, especially when you are into an election year. So steadily the trajectory of VIX, the range of VIX will shift, like it was in the earlier months. It was trading between 10 and 14 or 9 and 13. Now it could trade between 12 and 16, 12 and 17. But whenever the VIX moves above 17 levels, that should act as a trigger point for you from a short-term profit booking perspective. Now, if VIX moves above 17, that could mean that higher volatility, and since the markets have moved up too much on the upside in the last several months, you could see some kind of minor profit taking at higher levels. So till the time VIX is below 17, it could trade in a range of 13 to 17, and Nifty could trade in a range of 21,200 and 22,000 on the upside. The range could be a bit wider, and the volatility could be higher. But the real impact of VIX would be only if volatility index moves above 17 levels. So please mark this level. ये लेवल को important आप mark करके रखिए. 17 के ऊपर अगर volatility index निकलेगा, तब जाके आपको निफ्टी में थोड़ा ज्यादा पेन दिख सकता है. अदरवाइज एक नॉर्मल रूटीन प्रॉफिट बुकिंग, रूटीन करेक्शन आप कह सकते हो, एक सेक्टर रोटेशन हो सकता है उसमें, तो अपॉर्चुनिटीज रहेगी स्टॉक्स में. द ओनली थिंग इज that आपको you need to worry when the VIX moves above 17. Now see here, what we have marked in the circles, in the first circle on the left side, this is around July 2018 to May 2019 period, when the 2019 election was there. So here, if you see, there was a spike in VIX towards the end of the year or in the beginning of the year 2019. And at that point, Nifty had corrected by around 6 to 7% from higher levels. Around 800 to 1,000 point correction was there. But steadily, once again, Nifty moved up and at least went up to its previous highs. The second circle, if you see, that also a couple of years back, there was a rise in volatility index, but Nifty did not correct that much. So the Nifty steadily moved up. And there was some consolidation witnessed. So that is what I'm just trying to say here, that while the VIX is moving up, you will not always see Nifty correcting. you will see initially right now consolidation, and only beyond a particular point in VIX, say VIX moves above 17 and a half, you could see some kind of profit booking at higher levels. Now, just see the long-term chart of Nifty after breaking out of that consolidation zone a year back. Nifty has been slowly and steadily inching up into this upward channels and the rising channel, and every time it is moving towards the lower end of the channel, it is getting decent support and trying to move up. So here, as per the current levels, what we feel is the zone of 46,000, 46,200 will act as an important support. Now remember, this 46,000 zone was the swing high of July and September in the last year also, and I feel that that zone now could act as an important support if Bank Nifty corrects from here or there is some profit booking witnessed. So 46,000 would be the first support, 46,200, and the next support would be around 44,300. On the upside, we feel that the rally could extend up to the upper end of the rising channel, which comes to around 51,000 to 53,000. So this zone around this current consolidation could be a good opportunity to pick up stocks, outperforming stocks such as Kotak Bank, ICICI Bank, even IndusInd Bank. A lot of PSU banks are doing good. So I feel that this zone could be a good zone. This consolidation could be a good entry point from for a lot of investors who have missed the previous rally. From a short-term perspective, similarly like Nifty, we've seen Bank Nifty also witnessing some kind of a sideways move, and it is now trading below its 8 and 13-day EMA level. So that is the reason from a short-term angle, we feel 47,200, 47,300 zone could act as an important support for this current weekly expiry and the next weekly expiry. This significant put writing happening in 47,400 and 47,000 strike puts. So I feel 47,200, 47,300 from a short-term perspective could act as an important support. And on the upside, now Bank Nifty will require to cross 48,000 for a decent up move up to 48,600 and 49,000 from a short-term perspective. Yeah, coming to the mid-cap index. Now, if you see mid-cap index has given a good rally in the last 4-5 months. Starting September, October, we have seen a breakout out of this consolidation, and the current rally is just quite. If you not even reached the extent of the previous two rallies, it's not even half. So we feel that there is still some decent move possible in the mid cap and the small cap space, but you need to be now very selective. You can't expect the same pace of the growth that you've seen in the last year. But overall, 46,000, 44,000, 44,500 zone will act as an important support in mid cap index. And now mid cap index out after last 6-7 months of consolidation had broken out in September, October. So that consolidation zone is I always say that whenever indices move out after a bigger consolidation, breakout happens after a bigger consolidation, that is a very healthy sign, and that is what will always support the markets on the upside. That from the current levels, we feel, since even though it is overbought, 44,500, 44,700 zone could act as a good support, and we feel on the upside mid cap index can make a move up to 51,000. And let us even see how the mid cap index has performed in line with Nifty. Now this is a ratio chart of Nifty mid cap 100 compared to Nifty's move, and it is moving steadily in a rising channel, and it is still not reached on the higher end of the upper trend line. So still there is some move left in the Nifty Midcap 100, and it's still difficult to call this as a top for the Midcap index, because a lot of midcap across diversified sectors are still showing signs of a breakout even at higher levels. So we feel from the current levels also might be the stocks would change, the sectors would change, but the midcap rally could still continue for the next few months. Now, similarly with the small cap space also, if you see the small cap rally has also given a good, if you see the small cap sector, it has given a good move on the upside in the last few months, and the returns have been far higher than the markets, and it is obvious because since the risk is higher there in small caps, the returns are also much higher, 50-55% gains in the last one year we have seen, and especially in the last 6 months this has been a phenomenal rally. But if you see the context in the last two rallies, the rally is still young. This rally has happened after a bigger consolidation for the major part of 2022 and 2023 till June, July. And so we feel from the current levels, even if there is a consolidation, even if there is a profit booking move, the levels of 14,000, 13,800 could act as an important support, and major dips to 14,500 should be used to go long in a lot of quality small caps. But be a bit cautious here, because generally what we suggest is apart compared to the large small caps, we should be positioned more in large caps and mid caps, and only only a very small portion out of our capital should be into small caps. Just the similar ratio chart, if we see Nifty small cap 100 versus Nifty 100. Now, if you see here, that has also given a cup breakout from the current levels, and the resistance is still a bit far away. So this index Nifty mid cap, Nifty small cap could still continue outperforming Nifty in the next couple of months. Despite some consolidation, there could still be outperformance witnessed in these indices. I hope the slides are visible. I'm just getting this comments that the slides are not visible. If you could, if some of you friends could just share whether the slide is visible or not. Visible? Okay. Now let us just see sectors which are looking good. Now let us see IT. Now IT, see, there has been a big move in the IT sector since the COVID lows. After that, there was a big consolidation. Index corrected above around 30, 40, 45% from the higher levels. If you just see the rally, there was a 45% kind of a correction. It just rebounded ahead of the 50% retracement, and once again is now showing signs of a decent move on the upside. So what we feel is, from the current levels, the support zone for the IT index is around 33,000, 32,500, and the IT index could move up to 41,000 in the next 6 to 8 months. So the large caps such as Infosys, HCL Tech Mahindra, mid caps such as Coforge, uh, then LTI Mindtree, Tata Elxsi, Happiest Minds, or Birla Soft, they look really good. A lot of stocks like KPIT, Cummins, KPIT Tech. So these stocks out of the mid cap space could outperform the large cap space also. And overall, the IT index is now on a breakout, and it might consolidate. There's no doubt about that. That post this move in the last couple of months, we could see IT index consolidating, but it is now trading above this major consolidation zone, and this would this index could really support Nifty in the next few months on the upside. Now Nifty Pharma. Now if you see Nifty Pharma index here, let us see what the Nifty Pharma Index is showing us. Just zooming in into the Nifty Pharma Index, see this index has broken out above 17,000 on the upside. So and there was a again here also there is a cup and handle pattern which is there, and there's a breakout which has happened in the last couple of months, and it is on an uptrend here. The if you see the daily, weekly, monthly charts, all the stocks, major stocks of the pharma sector, even the indices itself are they are in a big uptrend. बड़े uptrend में है, multi year trend line breakout हुआ है weekly scale पे. तो यहाँ पे हमें लग रहा है कि फार्मा इंडेक्स में अराउंड 18,300 तक का अपमूव आ सकता है, और उसके बाद 19,500 तक के भी अपमूव आ सकते हैं. ऑन द डाउन साइड 15,700 का जो एक लेवल है, जो 20 वीक EMA लेवल है, वो एक बहुत इंपॉर्टेंट सपोर्ट बन सकता है. तो मुझे लग रहा है कि फार्मा में बाय ऑन डिप्स रखना चाहिए. स्टॉक्स सच एज ओरो फार्मा, लुपिन, सिप्ला, Divis, Dr. Reddy, lot of these stocks from the large cap, small mid caps में भी काफी stocks positive traction दिखा रहे हैं. तो ये सारे stocks पे हमारी नजर होनी चाहिए. Now coming to the next sector, which is the metal sector. Now see, what has happened is that metal sector in the last say 2022 जून से लेके हमने देखा है कि मेटल इंडेक्स में एक स्लो एंड स्टडी अपमूव आया है. एंड व्हाई दिस हैज हैपेंड, एंड द मेजर अपमूव हैज हैपेंड इन 2023 सिंस अप्रैल. सो व्हाट हैज हैपेंड इज दैट 2023 अप्रैल के बाद हमने देखा था कि डॉलर इंडेक्स में वीकनेस आया था. वहां पे थोड़ा इन्फ्लेशन का ट्रेजेक्टरी थोड़ा पिक आउट हो रहा है, ये एक्सपेक्टेशन बनना चालू हो गया था पिछले 5-6 महीने में. एंड दैट इज द रीजन वी हैव सीन अ big fall in the dollar index. And always let us remember, let us understand one thing, that जब dollar index में weakness आता है, that is positive from a commodity standpoint. So weakening dollar index always aids commodity stocks and the metal index on and whole. So हमने देखा है कि यहाँ पे एक symmetrical triangle, ascending triangle बन रहा था, वहां से एक breakout आया है metal index में. और अपसाइड में यदि हम देखें तो 8400 8500 is an immediate resistance on the upside if you join this trend line, rising trend line. So still there is some space there, but since metal stocks in the last several months have moved very fast, थोड़ा consolidate होने के बाद the metal index can head towards 8300 8500 on the upside. Within the metal space, Jindal Steel, JSW Steel, say a mid-cap stock like Shyam Metallic, they look really good. They look positive. From the PSU side, Nalco looks good. Especially from the aluminum stocks, Nalco look good. Hindalco looks good. NMDC also has given a multi-year breakout. So a lot of in this rally, unlike the earlier rally in metal stocks, if you see. A lot of limited stocks were participating, but in this rally a lot of stocks have participated. So I feel that overall 8400 8500 levels can come, but there could be some consolidation that we could witness in the metal index. Now the next important sector is PSU bank index. We've already discussed about bank nifty तो outperform कर ही रहा है, but मुझे लग रहा है PSU banks में एक और round of upmove है. And अब देखिए PSU बैंक का चार्ट, ये 2008 के बाद के लेवल पे अभी आया, तो एक मल्टी ईयर ब्रेकआउट अभी है. 13 साल का कंसोलिडेशन हम जहां पे 6 महीने के कंसोलिडेशन के ब्रेकआउट के बाद एक बड़ा टारगेट हमें मिल रहा है पिछले कुछ दिनों में. बट यदि आप देखोगे तो ये 12-13 साल के कंसोलिडेशन के बाद ये PSU इंडेक्स ने यहाँ से एक अपमूव दिखाया है. सो ओवरऑल मुझे लग रहा है आने वाले दिनों में अराउंड 5450 5400 जोन विल एक्ट एज एन इम्पोर्टेंट सपोर्ट जोन. और जब तक ये 5400 5300 के लेवल्स होल्ड करता है, तब तक ऑन द अपसाइड PSU बैंक इंडेक्स कैन मूव अप टू 6400 6300 काइंड ऑफ जोन. और टॉप पिक्स हियर कुड बी बैंक ऑफ बड़ौदा, कैनरा बैंक, PNB, मिड कैप में बैंक ऑफ महाराष्ट्र. सो ये 4-5 स्टॉक्स में हमें लग रहा है कि एक अच्छा रैली PSU बैंक्स में आ सकता है, एंड दिस रैली कुड कंटिन्यू. एंड ये 12-13 साल के ब्रेकआउट के बाद है हम जहाँ पे वेर वी आर सीइंग लाइफ टाइम हाइज ऑफ फ्यू स्टॉक्स बीइंग अचीव्ड हियर. दिस इज जस्ट you are just reaching the levels where you were once there in 2008. So there could be a big re-rating here on cards. And while you can see Bank Nifty moving higher, PSU banks comparison to Bank Nifty could outperform in the next several months. The next sector that we would be discussing is FMCG. Now FMCG, if you see, FMCG has delivered an impressive return of 150% since the COVID lows. And if you see last 3-4 years, gradually it is forming a higher top, higher bottom kind of a structure on the chart, and it is now approaching its upper end of the trend line. The rising trend line, if you just see the upper trend line, it is just reaching that place. So from the current levels, I feel that the index is slated to break out and even retest the level, move up to the levels of say 59,500, 61,000 on the upside, and on the downside the 20 week exponential moving average of 53,300 could now act as an important support, because we've just broken out of that consolidation, and 53,000, 53,500 zone on the FMCG index looks a very good support. Godrej Consumer Products, ITC, HUL, lot of these stocks are now showing signs of a up move from the current levels, and I feel that could support even Nifty. Always the Nifty FMCG has been a defensive bet, and while we are discussing about a potential consolidation in the next several months, so Nifty Pharma, Nifty FMCG, all these indices could support the markets when the markets are in a consolidation phase. Now, the next sector that we would be discussing is on Nifty Auto. Now, Nifty Auto has been on an up move in the last, say, even since COVID lows. That was the first sector to move out and show positive signs. And despite the inflationary pressures in the last year, despite the crude prices moving to $95, this sector has been on an up move. Lot of fundamental reasons are there, but if you see the charts here, even at the current levels, there is still some move remaining up to 22,700, 23,000, and that is a substantial 15-20% from the current levels. It is trading above all its moving averages, say that 20, 50, 100 week moving average, exponential moving average, and it's trading above all its previous swing highs. So this index is on an up move. It might consolidate from the current levels. If you see, it could consolidate between 17,500 and 18,500. But overall, post this consolidation, a strong up move could be on the cards. Stocks like Maruti, stocks like Hero Moto, TVS Motors, Bajaj Auto could act as standout outperformers, and a lot of auto ancillaries would see, because when you see the index moving in this trajectory or consolidating also, the ancillaries, the mid-cap side of the auto space could really give us a good return on the upside. The next sector that we have is the CPSE stocks, Nifty CPSE. Now, if you see, Nifty CPSE was in a range since 2014. This even PSU banks were in such kind of a range. But now here, when you see in late 2022, early 2023, this range got broken out. The CPSE index has sustained above all its important moving averages on the weekly basis, 20, 50, 100, 200 in the last 7-8 months, and is slowly being on an up move. So the pattern target suggests, now if you see this consolidation of the last 8-10 years, from the bottom of the consolidation to the top of this red line, it is around 140%, and from that zone, from the breakout zone here, this potential targets comes to somewhere around 6,500, 6,600. So there is still space remaining in the CPSE index on the upside. Since the move in the last month, couple of months have been too swift, too fast. Index could consolidate at current levels, and then we expect this up move to continue in the CPSE space. तो ओवरऑल जैसे हमने कहा, पीएसयू बैंक्स में भी एक तेजी है, सीपीएसई इंडेक्स में भी तेजी है. द नेक्स्ट सेक्टर जो हमें लग रहा है कि एक ब्रेकआउट दे रहा है और इनफैक्ट यहाँ से ब्रेकआउट के बाद एक अच्छा मूव कर सकता है, वो है निफ्टी ऑयल एंड गैस. एंड स्पेशली इफ यू सी लास्ट फ्यू मंथ्स, आप देखो कि BPCL, HPCL, Reliance, the entire gas pack. So all these stocks have given a good breakout on the upside from their consolidation zone. And especially यदि आप देखो कि Nifty oil and gas में since 2022 it has been in a rising channel, steady rising channel है, but consolidation हम देख रहे हैं यहाँ पे. बट यहाँ पे जो है सबसे कंसोलिडेशन के बाद ब्रेकआउट आया है, तो ओवरऑल वी फील दैट 8800, 8850 will act as an important support oil and gas sector के लिए. और on the upside 10,600 से लेके 11,000 के levels भी आ सकते हैं, which means that Reliance being the leader of the pack could outperform from the current levels. Here one more sector जिसका इंडेक्स नहीं है, सीमेंट स्टॉक्स का, but we have created a custom index giving equal weights to the top cement stocks. एंड सीमेंट स्टॉक्स में आप देखिए कि एक बड़े कंसोलिडेशन के बाद, नाउ द एंटायर इफ यू सी हाफ ऑफ 2021 एंड टिल अर्ली 2024, 2.5 साल का एक कंसोलिडेशन था. और उसके बाद आपने यहाँ पे हमने ब्रेकआउट देखा है ये सीमेंट इंडेक्स में. तो सीमेंट स्टॉक्स पे भी एक ध्यान रखना चाहिए. एंड स्पेसिफिकली इफ यू सी, आप देखिए कि गवर्नमेंट का फोकस इंफ्रास्ट्रक्चर पे है. इलेक्शन के पहले काफी प्रोजेक्ट्स को एग्जीक्यूट किया जा रहा है, काफी प्रोजेक्ट को कंप्लीट किया जा रहा है, तो सीमेंट का ऑफटेक बहुत ज्यादा रहेगा. तो एक जो सॉलिड रीजन होना चाहिए एक स्टॉक चलने के लिए या एक सेक्टर चलने के लिए, तो वो रीजन है और ब्रेकआउट भी आ चुका है. एंड जो आप देखिए स्टॉक्स लाइक अल्ट्राटेक, एसीसी, डालमिया भारत, फिर रैमको सीमेंट्स, ये सारे स्टॉक्स में दे आर ट्रेडिंग एट देयर मल्टी मंथ हाई, एट देयर ब्रेकआउट लेवल्स. And we feel that this positive momentum in these stocks could continue from the current levels, and that is the reason cement stocks में एक अच्छा up move आने वाले sessions में हो सकता है. The next sector that we have created a custom index, हमने जो दूसरे सेक्टर का भी एक इंडेक्स बनाया है, वो है रेलवे स्टॉक्स. तो रेलवे स्टॉक्स में भी देखिए, यहाँ पे भी आप देखिए ऑलमोस्ट एक बड़ा कंसोलिडेशन 1.5-2 साल का था, उसके बाद एक ब्रेकआउट आया है. एंड यहाँ पे थोड़ा एक लास्ट 15-20 दिन में आप देखिए द मोमेंटम इज स्लोइंग डाउन, तो दैट इज हिंटिंग एट सम काइंड ऑफ अ कंसोलिडेशन. द इंडेक्स इज अप्रोचिंग इट्स 20 पीरियड EMA. तो थोड़ा मुझे लग रहा है रेलवे स्टॉक्स में कंसोलिडेट हो सकता है, बट सिलेक्टिव स्टॉक्स से सच एज इरकॉन, IRFC, राइट्स, रेलटेल, वहां पे एक अच्छा मोमेंटम बना हुआ है. बट माय ओनली रिक्वेस्ट टू ऑल ऑफ यू हु आर राइडिंग दिस रैली इन द रेलवे स्टॉक्स, that keep the stop losses a bit tighter if you are a trader. From a investor standpoint, major dips आपको मिलेंगे, तो आपको यहाँ पे रेलवेज के स्टॉक्स में you should position yourself from a long term perspective, because ये तो अभी एक शुरुआत है in the railway stocks, and we feel that basis the announcements that we have seen in the last several months, तो this story has just begun. तो मुझे लग रहा है रेलवे स्टॉक्स में थोड़ा जिनकी भी लॉन्ग टर्म व्यू से पोजीशंस है वो बने रह सकते हैं. ट्रेडर्स को थोड़ा स्टॉप लॉसेस मैनेज करना पड़ेगा, बिकॉज द स्टॉक्स हैव रिजन टू फास्ट इन द लास्ट कपल ऑफ मंथ्स. तो थोड़ा वॉलेटिलिटी हम ये स्टॉक्स में देख पाएंगे. नाउ इफ यू सी द सीजनैलिटी, अब सीजनैलिटी देखते हैं कि हर मंथ में जनवरी मंथ में काफी सेक्टर्स ने क्या रिटर्न दिया है. तो आप देखिए इन द लास्ट 10 years, if you see, Nifty has given a negative return, but Bank Nifty may around 5 out of 10 years, Bank Nifty has ended positive. For the major part, IT index, then FMCG, media, यहाँ पे पॉजिटिव रिटर्न्स हमने देखे. तो आई फील जनवरी मंथ वी नीड टू बी अ बिट वेरी, वी नीड टू बी अ बिट ऑन द डिफेंसिव हमें ये देखना है कि जो लास्ट 2-3 महीने के जो गेन्स है बस हम वहां पे कंसोलिडेट करें, थोड़ा प्रॉफिट बुकिंग आ सकता है, बट डेफिनेटली दिस इज नॉट अ मंथ जस्ट टू ब्लाइंडली गो शॉर्ट बेसिस द डेटा. Trend is strongly on the upside. Consolidation हो सकता है. Maybe indices might close from a monthly perspective 1 or 2% negative, but that is nothing compared to the levels that we are at 21,000, 21,500 levels. So at higher levels, there could be some consolidation on the cards. And if you see here, metal index also. Now, metal index in January has given a negative return 8 out of 10 times. So while the overall trajectory is positive in the metal stocks, there could be dips in this month. And especially while we are discussing, the dollar index is also moving up. So this could be a potential reason of the metal index going sideways. And a rising dollar index will always be even positive from a IT space perspective. And you are seeing this out of 10 years, 8 years, January month has been positive from an IT standpoint. So banking, IT, FMCG, I feel could outperform from current levels. Even pharma in the last, if you say 6-7 years, uh, uh, pharma, except for a couple of years, have not been too negative. They have just been 0.5% to 1% negative. But whenever they have given positive returns, that is in the tune of say around 6% in 2015. So overall, I feel IT, banking, and FMCG could be considered as say stocks to watch out for in the next month or so. So coming to the top picks of 2024, we feel large caps such as say Reliance, ITC, HCL Tech, they should be focused on, and mid caps such as Dalmia Bharat, Godrej Consumer Products, Engineers India, CIE Automotive. So we've picked up stocks from say oil and gas, FMCG, IT, which we are liking. We have already discussed that these sectors could do well. Even cement, again FMCG, PSU stocks, auto ancillary. So diversified picks. You could consider these stocks from a 1 year horizon, and we feel that these stocks could do well. So with this, I would request my colleague Sunny to share us his fundamental inputs also on various sectors for CY24.
Yeah, thanks Sudeep, for a nice update on technical charts on various sectors. Before moving ahead, we need to keep our eyes and ear open and we need to plan of which are the key events which are likely to happen during the calendar year 24. And all those events will be on our radar when we take our position, whether it is short term, long term, or medium term. So what I've done, I've summarized the key events which are likely to be panning out over the next 12 months during January to December 24 12 months. So one of the key important events which is very nearby to us is the December quarter result. So from 5th of December we will see the result season kicking off with the GM release, which is the first publicly to report on 5th of December, followed by majority of the IT companies will start reporting numbers after 10th of January. Just a minute, I think telling that there is an echo. But laptop is it better now? Siddharth ji, Rajendra ji? Still there is dual sound? Check. Thank. I think there was some technical error. So what I was telling that whether we are a short-term trader or investor, we need to keep our eyes and ear open, and we need to keep track of all the key events which are likely to happen over the next 12 months. The very first event is December quarter results. So from 5th of January, we will see GM Breweries will be the first company which will report its quarterly number for the December quarter, followed by IT companies started to which will report their number from 10th or 11th of January. So the commentary from the management, the outlook from the various sector, that will be one of the key driver for short to medium term movement in the various sector. Then followed by there is a union budget, which will be on 1st of February, and again this budget will be vote on account budget. So no major announcement we are expecting from this budget. However, what I feel is that this budget will continue to remain a pro growth budget, and the focus of the government will continue to remain on capex spending on infrastructure, railway. At the same time, few SOPs may be given to the middle class in the form of some tax benefit in the form of movement of tax slab and so on and so forth. Then another important event which everyone is keenly tracking is the outcome from US Fed meeting. So as we all know that everyone is the street is discounting that US Fed is likely to start interest rate reduction cycle, and most probably the street is discounting that the first rate cut may come as soon as the March 24 or maybe in the month of June 24. Then the current narrative which is going on in the market is that the inflation has picked out, inflation is weakening, and gradually we are seeing cooling off in the US 10-year bond yield as well as weakening of dollar index. So any event which may lead to the reversal of this narrative may lead to a knee-jerk reaction in the stock market and may lead to some minor sell-off in the market. So we need to keep track of this narrative, whether the inflation trajectory continue to remain weak, whether the bond yields are which has reduced from 5% to currently 3.8, 3.9%, whether it remain in the same range, and dollar index which has corrected from 106 to 102 levels currently, whether it continue to remain in the current band or whether it will move further downwards or there is a further weakening of dollar. Then another key event post that we all know that election. So we may India will go for election in the month of April and May, and at the same time we have to keep in mind that this year almost 40 countries which comprises of 40% of the population will witness voting. So we will see Taiwan going for vote in the month of January. India, we all know April, May there will be election. US, so again US another important global factor, election in US in the month of November 24, followed by election in UK in the month of December 24. Main union budget which will be post election which may be in the month of July 24. Then another important key event to track is geopolitical situation. So we all know that the war is still going on between Russia, Ukraine, Israel, Hamas, China, Taiwan, US, China Cold War is going on. The recent crisis in the Red Sea is leading to likely possibility of attack by US on Iran. So we need to keep track of all this geopolitical situation which is going on currently in the various part of the world. At the same time, we need to keep tracking economic data which is coming from developed large economies like US, Europe, and China. We all know that as of now, US is showing a soft landing. So there is no signs of hard landing as far as US is concerned. However, China, there is a tremendous slowdown as far as economic growth is concerned. So China is growing at 5% due to the crisis in the property market. So these are the few key events which we need to keep on radar when we when we are trading in the market, and we need to keep our eyes and ear open to all these events. Moving on to the next slide. So again, one thing which we all need to know is that there is certain story or narrative which is currently going on in the Indian equity market, and any change in this narrative may lead to minor correction in the equity market. So the first common narrative we all know is that India is the fastest growing economy, 6.5%, 7% is the average growth rate of Indian economy. So that narrative is leading to a lot of positivity among the investor. Indian economy to grow from $3.5 trillion to $5 trillion and then $7 trillion in the span of next 3 to 7 years. Share of manufacturing in the GDP is likely to increase gradually over the medium to long term, backed by the various government flagship schemes like PLI and Atmanirbhar Bharat. JP Morgan bond index. So we all know that Indian government bond will get included in the JP Morgan bond index beginning June 24, and we will gradually see inflow of $20 billion dollar post June to December period. Then currently, the narrative is that the existing government will continue to retain the office with majority that will ensure the policy continuity. So any disappointment on that front may lead to heavy correction in the equity market. There is one assumption that government capex will continue, and at the same time, due to the robust economic growth, private sector capex will also pick up gradually, which will lead to the again a positive environment as far as credit growth and manufacturing sector is concerned. So we all know time and again we are hearing from the various consumption companies, FMCG companies, that urban market is doing pretty well as of now. The rural market were under pressure, and we are seeing some green shoots of recovery as far as the rural markets are concerned. Crude oil prices as of now is favoring the India. So we all know that crude oil prices have corrected from $95 to currently $75 to $76 a barrel, and that's the positive factor which is acting in favor of India as of now. And any shock to the crude oil prices due to any unknown event, due to any further escalation in war between the Middle East or oil producing nation may lead to the a change in narrative and correction in the market. And at the same time, India will continue to remain one of the favorite investment or destination because of a problem in the other economies. And I hope that narrative will continue to stay put for the next 3 to 5 years. Now, moving on to next slide. Sudeep has already covered the finer nuances of the various sector. What I have done, I have summarized all these sector in this one slide. From a medium to long term perspective, which are the sectors which are looking good. So on the extreme left hand side, if you see the name of the sectors which are below the thumbs up image, so auto and auto ancillary, real estate, telecom, public and private sector bank, NBFC, cement, capital goods and engineering, pharma, infra and power. These are the few sectors which we like from a mainstream, from a medium to long term perspective. IT, media, new age businesses and FMCG. So we are from a fundamental perspective, what we would like to do is that although technically we have seen a bullish chart pattern in all this sector, but from a fundamental perspective, what I would like to do that I would like to track the Q3 results for all these companies in this sector, and then be choosy among this sector with as far as my medium to long term bets are concerned. And there are few sectors which are showing signs of U-turn or kind of turnaround sign are chemical, consumer durable, QSR and footwear. So we all know all these four sectors were under pressure since last 12 to 18 months, and the reason being that fundamentally this sector were not doing well, and there is a hope that gradually chemical sector will come out of the slumber in the next 6 months. Consumer durable, which had a too bad season during the last 2 years, is expected to do well in the upcoming summer season. QSR again grappling with an inflationary issue, so it is expected that as the demand revives in the rural belt, the gradually QSR sector will also start reporting healthy same store sales growth. Footwear sector we all know is under tremendous pressure. So whether it is Bata, whether it is Relaxo, you name any footwear company, and they are not reporting any healthy earning growth. Moving on to next slide. Now I would like to cover a few sectors which are likely to grow at a rapid clip over the next 3 to 5 years. So the first sector on my radar is the electronic manufacturing sector. So we all know that India's because of the government scheme of PLI, the electronic production in India is increasing at a rapid clip, and the companies like Sirma, Dixon, NetWeb, which is a play on AI, Keynes Technologies, Amber, these companies are likely to report a healthy earning growth over the period of next 3 to 5 years, and this sector should be on radar if you are looking for moderate risk to reward ratio. Auto ancillary already discussed earlier multiple time. Again, this sector will be one of the key beneficiary of any rate cut if RBI implements. So that may lead to the increase in demand as far as auto sector is concerned. And at the same time, what I feel is that government is likely to push this sector for will support this sector because India has got a lot of strength as far as auto and auto ancillary sector is concerned. India has got a very strong presence as far as export market is concerned. So auto and auto ancillary is the low hanging fruit for government to increase the manufacturing base in India. So I feel this sector will continue to command support from government of India, and this sector should be on our radar for calendar year 24. Railways already we all know. Last budget was one of the biggest budget in terms of capital allocation for the railway sector, and I am expecting that for the in the current upcoming budget again railways will be under focus, and all the companies pertaining to railways, whether it is RVNL, RITES, BEML, IRCTC, or IRCON, you name the company which is related to railways will be one of the key beneficiary over the next 3 to 5 years. Moving on to next slide. Another sector which will remain under limelight is power and power equipment sector. So we all know that government is focusing on increasing contribution of renewables in the total power power generation. So what I believe is that renewable as well as the thermal power both will go hand in hand for next 3 to 5 years in terms of capacity addition, and all the companies, whether it is input material company like Coal India, which is supplying coal to the thermal power company, or whether it is a solar company which is making a solar module, whether the companies which are making transformer, companies which are making high voltage cable, companies which are into the smart meter installation, all these companies will be witnessing a healthy earning growth over the next 3 to 5 years. Renewables already I have covered as a part of power sector. So renewable again, here there is a humongous growth opportunity in the solar, wind, battery storage, pump storage segment. So entire sector will remain under focus. Biofuels, although there is a temporary blip as far as government policy on ethanol is concerned, but one has to keep in mind that biofuel story is not only about ethanol. Biodiesel is one of the upcoming segment. At the same time, government is planning to blend ethanol or for that matter a specialized fuel along with the aviation turbine fuel, which will reduce the pressure on the forex outgo. So biofuel is one of the sector which I feel is likely to deliver a healthy growth opportunity for the corporates in India. Moving on to next slide, water treatment is one of the focus sector for the government, and what I feel is that companies like Vatek Vabag, Vishnu Prakash, Ion Exchange, Wellspun Enterprises, EMS, so all the companies which are catering to the water segment are likely to be a key beneficiary of the support of the government through Jal Jeevan Mission or Amrut scheme. At the same time, as government is trying to supply water to every nook and corner of the country, all the pipe companies which are used for transport of water from location A to location B. So whether it is companies like APL Apollo, Jindal Saw, all these companies will also be key beneficiary in medium to long term. Asset management company, wealth management company, stock exchanges. Again, we all know that markets are at lifetime high. There is a record high participation happening from retail as well as institutional investor. So all the companies which are catering to the stock market intermediate, stock market participants like you and me, whether it is mutual fund companies, whether it is the depository companies, whether it is the wealth management companies, whether it is broking companies, all these sectors will have a decent growth runway for next 3 to 5 years. Engineering and defense, it's a well-known sector. So defense is again, I feel will get a fair share of limelight in the upcoming union budget. And again, what I feel is that for defense, the export opportunity is humongous. So till now, all these companies were catering to the domestic requirement, and as the proof of concept is established, I feel the demand for weapons manufactured by Indian company will explode over the next 3 to 5 years. So moving on to next slide, what we have done is that since we have seen a massive rally during the last 9 months, what I have done, I have created a universe of stock which should be on our radar for next 6 to 12 months. So what you can do, you can take a screenshot or picture of this slide. So there are 3 to 4 slides where I have created a universe of stock which can be on your radar. You can add these stocks on your watch list in SBI Securities mobile app or any mobile app you are following, whether it is Money Control or any other mobile app, so that this stock should be on your radar. And whenever there is an opportunity in the market, when there is a correction, short-term correction due to any unknown event, so we are ready with our buying list. We are ready with our quality list of quality companies, so that we don't get swayed away by the tips, and or we don't get stuck in the portfolio which comprises of the dead stock or the company which has got no fundamental backing. So for your benefit, what we have done, we have created a kind of universe across large cap and various sector. So what I would request is that I will spend next 30 seconds for each and every slide, so that you can take picture of the same. आप इसके पिक्चर ले लीजिए, स्क्रीनशॉट ले लीजिए, और डेफिनेटली आप आपके रडार पर ये सब कंपनी रखना. कैलेंडर ईयर 2024 में यही कंपनीज हैं, मुझे लगता है कि एक अच्छा डिसेंट रिटर्न हमें यहाँ से दे सकती है. I hope everyone has clicked the picture and or have taken a screenshot of this slide. So I will move on to the next slide. So in this slide, what we have done, I have covered a few large cap names which I feel can deliver a decent return over the next 6 to 12 months. Then second column comprises of name of the banks and NBFCs which are likely to do well over the next 6 to 12 months. Third column comprises of companies from capital goods sector which are likely to do well over the next 6 to 12 months. Now I am moving on to the next slide. You can take picture of the same. So next slide, the column on the extreme left hand side comprises of company from a list of companies from power and infrastructure sector. The middle column comprises of companies from pharmaceutical sector. What I feel, pharma again, as Sudeep has already discussed, that technically the pharma sector is looking pretty good. But again, pharma is a large oasis, and one has to focus on few companies which are likely to report a healthy earning growth. So this is a list of universe which you can keep on your radar. On my right hand side, extreme right hand side, there is a list of companies from auto ancillary sector. So we all know that upcoming Gujarat Vibrant Summit, which is likely to kick off from 10th or 11th of Jan, we may see some announcement on auto sector also, as Gujarat has become a big hub of automobiles. Sanand area where we have seen Maruti has got a huge plant. And what I feel is that Gujarat government will also roll out some incentives or benefit for auto companies to set up a plant in Gujarat. And ultimately, auto as a story is a long-term story, whether it is on a domestic front, export front. So it's a pretty strong runway which I see for auto and auto ancillary industry. And these are the few names which we like from auto ancillary industry from next 6 to 12 month perspective. I hope you all have taken a picture of the same or have taken the screenshot. Now I will move on to the next slide. So next slide, on extreme left hand side, the box comprises of mid-sized IT companies. So Sudeep has already discussed that IT companies, at least technically, are looking pretty robust. So what I have done, I have created a small list of companies which are likely to report a decent earning growth, and at the same time their outlook is pretty healthy. The middle column comprises of lists of companies from railway, defense, and engineering sector. So these companies can be on our radar for next 6 to 12 months. Real estate and ancillary companies on extreme right hand side. So with companies from real estate sector like Shobha, Oberoi, Godrej, Shriram Properties, or from whether it is ancillary companies like Kajaria, Century, Greenland, Astral, these companies can be on our radar. So I will request everyone to take a screenshot of this slide also before I move on to the next slide. So in this slide, what I have done, I have captured investment universe from consumption and textile sector on extreme left hand side, cement, metal and mining in the middle row, and on my extreme right hand side, I have captured companies from asset management, stock market intermediaries. So all these universe can be, all these stocks can be on our radar. I hope everyone has clicked the picture or taken the screenshot. So moving on to the next slide now. On this slide, so basically on extreme left hand side, I have covered universe from renewables, ethanol, hydrogen, and electric vehicle space. So on in the middle column, chemicals and agrochemical. So within chemical, what I have done, we have done is the companies which are focusing on electric vehicle chemicals like Ami Organic, Ether, Clean Science, Neogen, Himadri. So we have included companies which are focusing more on electric vehicle side, and at the same time we have included companies like Nosil, which is one of the largest global chemical supplier to the rubber industry, Paradip Phosphate agrochemical company, wherein they're one of the big plant of phosphoric acid is going on stream next year. So these companies can be on our radar. EMS, as we have discussed, on all these companies I have covered in the extreme right hand side. At the same time, I have included two holding companies also. One is RPSG Venture and BBTC. So RPSG Venture is a holding company of First Source Limited. What I feel is that trading at a to significant discount to the holding value of First Source. BBTC is a holding company of Britannia. So that's all from my side as far as investment universe is concerned. See, I can understand that since in the fourth slide there were to the tune of almost 50 to 60 companies, but my agenda or my aim is that you should keep all these companies on radar, and whenever there is a dip in the market, when there is an opportunity to deploy fund in the market, you can choose the selective companies from this list, right? You can get in touch with our research team at that point of time कि भाई ये 50-60 कंपनी है, इसमें से मुझे 5 कंपनी लेनी है, मुझे 10 लाख रुपए लगाने हैं, 1 लाख रुपए लगाना है, 50,000 रुपए लगाना है, तो मुझे इसमें से सजेस्ट कीजिए. ये आपको एक रेडी रेकनर की तरह आपको हेल्प करेगा, और आप ये जो कंपनीज हैं, you can take advantage of these companies across the product, whether it is future and options, whether it is cash market. So this is the kind of ready universe for you which you can refer to on the go whenever there is a correction in the market, or when or while planning your strategy to invest for whether it is for short term, medium term, or long term. So that's all from our end. So what we will do, we will quickly conduct, since the presentation has run for almost 1 hour and 20 minutes. So we will take Q&A for only next 10 minutes, and we will wrap up the session by 1:30. Okay. So we will let me choose. So this time, rather than going question by question right from start, what we will do, we will do a selective pick and choose as far as Q&A is concerned, so that everyone benefits out of the quality questions which has been asked by few of you, right? Yeah. Let me see the question.
Yeah. So, friends, if you can just put in your questions in the text box, we would be able to take them. Friends, if you could put your questions in the text box, we would be able to take them.
पहला विवेक भट्ट कह देगा मैंने तो बैंक निफ्टी व्हाट शुड वी बाय टू टेक एडवांटेज ऑफ दैट निफ्टी भी और बैंक निफ्टी भी बोल देना.
See, if someone Vivek ji is asking a question about when we say Nifty or Bank Nifty will go up, what should we buy? See, Vivek ji, आप यहाँ पे लार्ज कैप स्टॉक्स जो अच्छी क्वालिटी के है वो भी ले सकते हैं विदिन निफ्टी विदिन बैंक निफ्टी, या फिर आप निफ्टी 20 या बैंक निफ्टी 20 भी ले सकते हैं टू टेक एडवांटेज ऑफ दैट. एंड निफ्टी अगर यहाँ से समझो 500 पॉइंट ऊपर लग रहे तो लॉट ऑफ सेक्टर्स विल मूव, लॉट ऑफ स्टॉक्स मिड कैप स्मॉल कैप्स मिड कैप्स वुड मूव गुड क्वालिटी. सो जैसे सनी ने अभी आपसे शेयर किए स्टॉक्स के लिस्ट, तो वहाँ पे जो जो अच्छे स्टॉक्स अच्छी क्वालिटी के स्टॉक्स होंगे वो आपको चूज करने हैं और वो लेने, सो दैट मार्केट जब रैली करेगा, निफ्टी 5% रैली करेगा तो आपके स्टॉक्स 7-8% रिटर्न देंगे. अगर वो आउट परफॉर्मिंग एक अच्छी क्वालिटी का स्टॉक होगा तो वो जरूर से आउट परफॉर्म करेगा मार्केट को. और यदि आप स्टॉक्स से आपको थोड़ा इफ यू आर नॉट कंफर्टेबल कि कौन सा स्टॉक लूँ कौन सा नहीं लूँ, तो you could anytime follow our research also, and along with that you can even buy Nifty Bs or Bank Nifty Bs also, just to take advantage of this up move in the indices.
मैं लेता हूँ
ये
फाइल का लेता हूँ तुम
ठीक
यूज कर.
एक सेकंड, मैंने अभी एक डाला है देख आगे ऊपर, वो ले लेना पड़ेगा.
Which sir, which are the underperforming sector which are yet to run participate since last year rally? As we have already discussed during the presentation, the few sectors which were underperforming, which are significantly underperforming, are chemicals, footwear, QSR industry. So all these three sectors have seen a significant underperformance. Similarly, IT, especially large cap IT companies, have seen a kind of sideways movement in the during the last 6 to 9 months. So that sector was one of the key underperformer. So what I feel is that ultimately, rather than waiting for underperforming sector to start or participate in the rally, what I would suggest that one should be on in the sector which are currently in the momentum, where there is a clear visibility of the growth. And among the underperforming sectors, still if somebody wants to go contra, so I would suggest you to stay with the IT sector. Again, for IT sector, what I would suggest is that the quarter 3 results season is very nearby, and we will hear from the companies what is their outlook for calendar year 24. How are their client place in terms of the IT spending budget for calendar year 24. So IT large cap sector where the valuations are comfortable, however the growth is missing. So in case the management come out with a commentary that the growth is likely to be low double digit to high mid double digit over the next 12 to 18 months, then large cap IT companies can be on radar from underperforming sector. FMCG sector, although trading at an expensive valuation, selective counters like ITC, Tata Consumer, so companies which are growing at a relatively faster clip, Godrej Consumer, these companies can be on radar from FMCG sector. And among the underperforming sector, chemical. So chemical again have started to participate in the rally, but what I feel is that fundamentally still it is 6 months away where the companies will start to report a decent set of number. So if somebody want to participate in a chemical sector, gradual SIP route buying or gradual buying over the period of next 6 months is recommended as far as participation in chemical sector is concerned. One sector which is totally neglected is footwear sector. What I feel is that based on the low base of calendar year 23, calendar year 24 can be the year where we may see some revival in demand as far as footwear sector is concerned, because we all know footwear, the majority of demand come from rural market, and as all the companies are saying that rural economy is seeing a green shoot and likely to see recovery over the next 3 to 12 months, and hence footwear can be one of the underdog sector over the period of next 6 to 12 months. I hope I have answered your question. Yeah. The next question is from Shushmita ji. We bought Xylem Industries at the rate of 1873. Now it is 1678. What is our strategy? Shushmita ji, we have recommended Xylem Industries under the Rising Star series, wherein it is a long-term investment or a long-term call. So we have recommended the stock at the price of around 1200, 1300, and post that we have seen that it has hit its target of 1800 very soon. And now post this second quarter result, we have upgraded the stock price to 2200 rupees. So what I feel is that if you are a medium to long-term investor, stay put, stay remain invested. As we have seen the entire real estate ancillary companies, whether it is Century, Kajaria, they have not done well over the period of last 6 months, and Stylem is again part of that industry. But however, the outlook for real estate industry continue to remain robust for next 6 to 12 months, and hence I believe that even the sector like real estate ancillary, whether it is the laminate companies, plywood companies, paint companies, they will continue to do well over the period of next 6 to 12 months. So kindly stay put, don't worry. I'm sure you will make a decent amount of money in Thailand industry. And in case you have got an if you have got an firepower to average out your buying in Thailand industry, what I would suggest is that wait for the third quarter number, December quarter number, and post this quarterly result. You can then average your holding in Thailand industry.
Now Harshal Satam is asking, will investing in Nifty, Nifty 50, Nifty PSU bank stocks and IT stocks be good from a 12 months perspective? Absolutely. See, from a technical perspective, we feel that Nifty PSU bank is still headed much higher. Sunny already has shared his inputs on the PSU banks, why they are looking good. Even IT stocks, he has said that select IT stocks are looking good, and he has shared a list of that. So I feel good quality IT stocks, say maybe a stock like TCS, HCL Tech, a few of mid-cap names, they look good from the current levels also, and I feel you should be invested in them from a 12 to 18 months perspective. Vijay Kumarji is telling that, sir, IPO pouring in the last few months, investing in these IPOs need your guidance. Sunny, if you can just take this.
Yeah, so Vijay Kumar ji, so again, there are a few more IPOs which are lined up in this month, and what we feel is that calendar year 24, we will see maybe number of IPOs which will hit the street, maybe in a higher number as compared to last year. And what for your guidance, what we do for every IPO, we release the IPO note which captures the entire business model of the company, what are the financials, and what is our view. So whenever we say that one has to subscribe for long term, then that should be your signal that in that case valuations are slightly stretched and listing gains may not be possible in those companies. However, whenever we are recommending only subscribe rating, you should understand that there may be a chances of listing gain. So for again, IPO investing is varies from company to company, and you need to take help of your advisor or dealer or research team for each and every IPO. Keep reading our IPO note. All the notes are available on Telegram channel. We are uploading these reports on SBI Securities website. So if you go to the SBI Securities website, you need to go in the research section. There under the fundamental section on extreme right hand side, you will see an IPO note section. There you can download the report, read at your leisure, and that will give you a fair level of understanding on IPO, on the company business model and financial. Still, in case you are unable to understand, you can definitely get in touch with the research team through your dealer or advisor. So next question is from Deepak ji. Deepak ji is asking which IPO is coming. So Deepak ji, on 9th of January, Jyoti CNC, one of the CNC machine manufacturer company, is coming up with an IPO, and it will open on 9th of January. We will soon release a detailed business note on the same for your benefit. Again, Vijay Kumarji is asking, shall I take and decide the grey market price? See, Vijay Kumarji, there is no sacrosanct formula that in case the price is, there is a premium in grey market, then definitely you will gain, you will get a listing gain. So during the last 6 to 7 listing, we have seen that many IPO companies, many IPOs have companies have listed at an issue price or below the issue price, and only handful of the companies like Inox or for that matter Happy Forging have listed at a premium. So gray market should not be one of the only thing which one should look while applying for IPO. So usually gray markets sometimes also get manipulated by operator, and that may lead to losses in case you are looking for listing gain. So better to take advice from dealer, advisor, or from a research team, and don't rely only on the gray market premium to apply for the IPO. Siddharji is asking, is it true that there will be fear of fund outflow from last constituent of Nifty 50, example UPL? So Siddharji, see UPL, first I would like to share a fundamental view on the UPL. So we all know UPL has been under trouble, so they are not performing well as far as financial performance is concerned. And entire agrochemical industry, UPL being a global agrochemical company, entire agrochemical industry is under pressure. Coming to your question on fund outflow, yes, so it may be possible that because of several churn, whether it is from MSCI index. So we all know that Feb is the due date where we may see one round of outflow or inflow based on the MSCI rebalancing. Last month, during the last week, we have seen rebalancing in the few indices of National Stock Exchange, that is Nifty 50 and so on and so forth. See, now this has become a perennial event as far as equity market is concerned. Sometimes there is a Nifty, NSE rebalancing, sometimes there is MSCI, sometimes there is FTSE. So every month or two we see a rebalancing which keeps on happening. So to that extent, yes, a basic common sense is that since the stock is not performing well, we may see that one of the better company may come under the Nifty 50 or Nifty Next 50, and UPL may move out. But again, I am not sure on this aspect whether UPL will be part of Nifty 50 or will go out of the Nifty. So as of now, I don't have any answer for that. But my view as of now is neutral on UPL. All the negative news is already in the price. The stock is trading close to 600 rupees, the 650 band. And what I feel is that till the time performance doesn't improve on financial front, the company will continue to trade in a range-bound fashion. So I think we have exceeded our time limit. So it's already 1:30. And many thanks for joining us today for this webinar and taking time out from your busy schedule. I hope you like our content. And I once again wish you and your family a happy new year, and wish you all a lot of success in the next 365 days. And I hope we will try our best to create a wealth for you in your portfolio and bring a lot of happiness and smile on your face. So what do you, Sudeep, for your final message?
Yeah. So thank you all for attending this session, and I really wish this year becomes the best year for all of us from an equity market return perspective and from an overall perspective. So wishing you all the best in this upcoming year. And whenever you require any help from our side, whether it is from a research perspective, any stocks perspective, any sectorial perspective, you can anytime write in to us at research@sbicapsec.com. So you could connect with us directly there, and we would be most happier to help you and guide you. So thank you all.